Welcome back to Explain the Charts, where we break down complex market movements into easily digestible insights. Today is February 3rd, 2025, and we're tackling Microsoft, MSFT, stock, which has experienced notable volatility recently. Let's start by exploring relevant news. Recent headlines point to robust cloud and AI growth for Microsoft, surpassing expectations in Q2 2025. However, there are concerns about the sustainability of the cloud segment's growth in the long term. News reports also highlight some sell-offs by institutional investors such as the Healthcare of Ontario Pension Plan Trust Fund. This suggests possible profit-taking or reallocation of assets, worth monitoring. Now, let's dive into the chart data and identify patterns that correlate with the recent news. Examining the daily chart provides a broad overview of MSFT's price action. Over the past few months, we can see an upward trend, possibly fueled by the positive news around cloud and AI growth. However, notice the recent pullback, a potential correlation with the news of institutional selling. The 385 level served as support in the past, but the most recent support was close to 400. The 420 range seems to be strong resistance right now. The volume has been quite high during these periods of significant price movement. Let's switch to the 1-hour chart to view some shorter-term trends. The 1-hour chart offers greater detail on the recent pullback. This chart allows us to hone in on some price points to help us with our trades. Here we see a clear support level around 415, which has held reasonably well in recent days. There's also some resistance to note at the 420 level. A breach would likely trigger a more decisive upward move. These are key levels to watch in the short term. If the 415 support fails, the price could drop to the 405 to 400 level. A strong recovery above 420 could signal further long-term upward movement. However, let's take a closer look at the 15-minute chart to see more detail. The 15-minute chart allows us to analyze short-term, high-frequency trading opportunities. Here, we see the high-frequency changes which can be used to execute short trades. Notice the rapid price changes within these short periods of time which create those high-frequency trading opportunities. However, using this time frame alone creates too much risk, and it is generally recommended that one use this time frame in addition to longer time frames such as the 1-hour or 1-day time frame. In the short term, the most important levels are around 415 and 420. If we focus on the 1-hour and daily charts, it makes those levels more significant. Breaking above 420 in the 1-hour chart is a significant indicator for a further bullish move. Breaking below 415 in the 1-hour chart is a significant indicator for a further bearish move. But the longer-term trend, as suggested by the daily time frame, is likely to be upward based on recent company performance. It is important to note, however, that these are merely predictions based on current data, and the market is unpredictable. Let's recap the most important price levels. The 400 to 405 level shows significant past support, while the 415 and 420 levels are currently important short-term support and resistance, respectively. On the daily chart, the 385 level shows historical support, and 420 shows a clear resistance. There is a chance the price will break above 420 and go to the 430 to 440 range. This is more likely if we see continued positive news on the AI and cloud sectors. There is also a chance the price will drop to the 400 to 405 level, which depends on the future news around the company. It is important to monitor news headlines, as this is an important factor in predicting price action.